Hi, this is Eric Bird, the manager of the Loudoun County Small Business Development Center. Now, in December of 2020, I had a chance to interview one of our local area CPAs, Clint Thomas, about getting ready for the end of the year and preparing for your 2020 tax returns. And we covered a lot of useful topics in that video that we hope were very helpful for you. Now, shortly after we recorded and posted that video, the new Economic Aid Act was signed into law. Now, that legislation did several things, including funding a second round of Paycheck Protection Program forgivable loans for small businesses. Now, another thing that it contained was some changes to the information that we had provided in our first video. So in order to make sure you have the most current information for your planning purposes, I sat down with Clint Thomas again in January here in 2021 to review what the changes were and how they might affect you. So we're here with Clint Thomas, our resident CPA genius, to help us make some heads or tails and get some updates after the latest legislation that's come out. Clint, thanks for joining me today. We want to do an update to the video we have done in December 2020, outlining some of the things people needed to be thinking about as they enter tax season. And so first and foremost, can you give us an update on some of the things that changed as far as the IRS requirements in the new law versus what we had done in the previous video?
Yeah, Eric, thanks for having me. I appreciate it. Always happy to help. So much has changed since we last posted on this. When we were around Christmas time, we had certain guidance out that stipulated that any expenses you factor into the PPP loan forgiveness application, those expenses had to be added back, which sort of made it taxable income anyway, no matter what they said. So a lot of small business owners were going to be suffering under that. And so thankfully, they fixed that problem. The Consolidated Appropriations Act of 2021, I think it was signed around the 27th of December, did a fix, and Congress got it right and said, no, Treasury, here's what we intended. And so they made it very clear that the expenses that you paid with your PPP round one funding, those are now deductible, thankfully. And so that's going to help a lot of people lower their tax liabilities for 2020. Otherwise, they would have had to add that back into income if there was any reasonable expectation that that loan would be forgiven. They also went on in that CCA Act to clarify that gross income for 2020 does not include EIDL loans, emergency EIDL grants, and even loan repayment assistance that you may have received from the SBA last year. They had a 6-month period where they were deferring or making the payments for you on your 7A loans. So even that was clarified to not be gross income. So that's a big hooray for a lot of small business people out there.
Excellent. Just to be clear, this is the federal, right now it's federal only, correct?
Yes, Virginia, for example, has not yet moved their conformity date up to 12/31/20. They're still 12/31/19. They are in session. They're expected to deliberate on this and hopefully pass and move conformity date up to the end of 20 to conform with some of these guidelines. But even so, even if they do, they still may not conform completely. So we're waiting on further guidance from the state on that.
Okay, so that's an important thing for everybody to keep in touch with their accountant on as they're processing and doing their taxes. Don't be surprised if some of those things don't align exactly. That's an important thing to keep in mind, right?
What that means, Eric, is that you may indeed have a state add back for some provisions where the feds allow it, but the state doesn't. So again, just check with your accountant or let us know if you have more questions on that.
Excellent, perfect. So also in the new legislation, more funding for PPP, and you mentioned when you talked about the being able to count the expenses as expenses and not having to count the PPP forgivable loan as income, that applies to now both, whether if you got a PPP first draw, as well as any people who get a second draw loan, correct? That's for any PPP loan at all.
Yeah, as long as you spent your round one funding already, then you're eligible to qualify to apply for a round two funding, as long as you can demonstrate you have a 25% reduction either overall for 2020 versus 2019 or on a quarter by quarter basis. I know the SBDC's put out guidance on that already. So that's some good information out there already.
Yeah, and we also know that it can be a little confusing to do the calculations. So we do have some information on exactly how to do that and where to do that. We also have some coaches that can help you, as well as always advising you to lean on your CPA to help you figure that stuff out if need be. Excellent. So, and then one big thing that is also changed in the new legislation is some new rules around the employee retention credit. And I'm very interested in this because I think it's something that people don't know a lot about. And so I would like to ask if you could kind of give us a primer on, well, what is this thing and how is this change important and how might people be able to take advantage of it?
Yeah, this is a big opportunity for small business owners. The employee retention credit at first was passed over by many when it was first introduced by the CARES Act early on last year, because the rules were such that if you took out a PPP loan, you could not also do a employee retention credit. And so for those who got a PPP loan, they were out of not able to take advantage of the ERC. The rules have now changed under the COVID Tax Relief Act that has been passed. So now, even if you took out a PPP loan, you can also, as long as those same dollars don't go into the PPP loan forgiveness calculation, if you spend additional payroll dollars beyond what you use for PPP, those additional wage dollars can now apply toward the employee retention credit. And it's a big deal because you can actually retroactively now go back and apply for the employee retention credit, or ERC, for 2020. And it's also been extended now into the first 2 quarters of 2021 with an even more generous calculation. So there's differences here. So first of all, for 2020, if you can show that there was a disparity in your quarterly revenue for 20 versus 19, at least 20 had dropped by at least 50% compared to 19, then you can qualify for the employee retention credit. And the calculation is such that you get up to $5,000 of a credit per employee. So 50% of the first $10,000 of annual wages. That's the 2020 calc. So you're talking $5,000, up to $5,000 per employee if you qualify for this credit. The calculation in 2021 is even more generous. Now it's a by quarter credit. So it's the first 10,000 of wages per employee per quarter. And it's now, instead of 50%, it's 70%. So you're talking up to $7,000 credit per employee per quarter in 2021 on top of what you may qualify for in 20. Now, who can get this? It's a provision that is a little bit gray. The language surrounding this says that, hey, if you had any partial, full or partial suspension in your operation under a government order, or you meet the math test. And so the math test basically says, hey, did you have any reduction 50% in any quarter over 19? For example, your Q1 revenue was 50%, but less than 50% of what it was in 19 for the same quarter. You go by quarter to analyze that. Or, again, if you don't meet the math test, some are trying to qualify for the ERC under the argument that, hey, I was at least partially affected by a government order under COVID. So talk with your accountant on that to see really what is a reasonable methodology for you to stand on in claiming the ERC. But the dollars are very rich. I think this is going to be a huge win for small business. And I would really ask you to go, talk with your tax advisor and go through the calculation in detail and see if you qualify.
So that's very interesting, especially I think for those who were their industry was stated in, for example, the governor's shutdown order from last year. Those would be obvious, beneficiaries to be able to take advantage of this because they were forced to close, listed as an industry. But it's interesting to say that if you were also ripple affected by that, and we saw some of that in the Rebuild Virginia grant, they expanded the qualifications for getting that later in the program last year to include the ripple effect of that shutdown. If you were a supplier to a salon, for example, and the salon was shut down, well, then obviously you're going to be significantly impacted. So there's an argument to be made there that you also were significantly impacted by the government order. So that's a definitely something you want to explore.
Yeah, and the great thing is it's a refundable credit. We are waiting on guidance from the IRS on how to actually claim it, how they want us to do it. We believe it is a payroll related credit, so we believe it's going to involve the filing of some amended 941s for payroll where the credit will be claimed, and then you'll get the credit through the payroll cycle, or the payroll tax filing process, and a refund will come through your amended 941 instead of a credit that you would normally claim on your tax return. So we're waiting on further guidance on that. There's a new form out there, Form 7200, that allows you to claim advanced credits like this that then gets reconciled later on. So again, we're waiting on clarity with the ERC in particular as to how we're supposed to actually claim this credit. So it's kind of a piecemeal approach right now.
Okay, that's excellent. We appreciate that, and we'll keep an eye on that, and if we get specific information about how to, on the IRS guidance on that, we can maybe do an update to this as well. We'll make this a whole series and have you back again. We really appreciate your expertise and input, Clint. It's invaluable for our clients, and I'm sure that we'll do this again before it's all over. Really, thank you for coming on and helping us understand these things. They get to be really complex.
Yeah, there's so many changes that are ongoing, so we're happy to keep updates coming.